Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll discuss in one question labor cost for the company and earnings for the workers. From the following information available, you are required to calculate net wage bill as well as total wages cost as well as total wages cost. As per the time cards, the gross earnings of workmen is rupees 3 lakhs. The various deductions from gross earnings are as under. Employees' contribution to Provident Fund, ESI employees contribution, ESI employees contribution, advance against wages, cooperative dues, canteen charges, income tax. Company's contribution to Provident Fund and ESI are rupees 25,000 and rupees 8,000 respectively. Let us first compute net wage bill with given information. As per the time card, the gross earnings of workmen is rupees 3 lakhs. Gross earnings are given rupees 3 lakhs. We are required to do deductions of items so that we can arrive at net earnings of employees. First, employees contribution to Provident Fund 25,000. Provident Fund is a fund created for the welfare of the employees. To this fund, employer as well as employee are required to contribute certain amount. The amount contributed by employer becomes employee cost. The amount contributed by employee from his own salary is his share towards Provident Fund. It is not an expense for the company, but it will be allocation of employee's salary as per his own wish, voluntary contribution to Provident Fund. Employees contribution to Provident Fund 25,000. It means the amount will be deducted by the employer from salary payable and it will be appropriated towards share of employees to Provident Fund. So this amount will not be given to employee in hand. So to calculate net or take home salary, we are required to deduct this amount of share of employees contribution towards Provident Fund from his gross salary. Next, employees state insurance scheme, employees contribution 4,000. According to ESI schemes, worker gets benefit of health, benefit of pension and other facilities under the scheme. For this purpose, he is required to contribute towards some amount of premium for this scheme. Certain part of the premium is paid by the employer, which becomes for employer employees cost. amount of salary payable to employee will be reduced by the amount of premium. That premium will be deducted from the salary and it will be directly paid to ESI authorities. Next, advance against wages 8,000. It means in the past, employee must have taken some advance amount from the employer. That amount is now adjusted from the amount of salary payable and employer is deducting the part of that advance on monthly basis, and accordingly we find that during this period the total amount such deducted is rupees 8,000. Next, cooperative dues 6,000. There may be cooperative society formed which is linked to the employment police. There are certain dues towards the advances of amount taken by the employees from the cooperative organization. That amount has to be now paid out of salaries of the employees. For this purpose, employer deducts the amount of such cooperative payments and pays to the society. So this amount is required to be deducted from the gross salary. Next, canteen charges rupees 1,000. Canteen is a facility provided by the employer where worker is allowed to get benefit of snacks, lunch, etc. For that purpose, employer charges some amount which is very nominal, which is adjusted from the salary of the worker. So that those canteen charges we are required to deduct from gross salary. Next, income tax rupees 5,000. Every worker is required to pay his liability of income tax towards the government based on wages earned by him. In this case, as per the Income Tax Act, every employer is required to have tax deducted at source. Tax deducted at source means the amount of income tax which employee is required to pay to government will be collected by the employer and that will be directly paid by the employer to the government. That means employee is not required to pay income tax directly. It will be paid by the employer out of salary payable to employee, which is called as tax deducted at source. In this case, rupees 5,000 is deducted towards income tax. We have considered all deductions. Let us add them. Total deductions are of rupees 49,000. This will be deducted from gross salary 3 lakhs. So it is 2,51,000. This will be referred as net earnings of employee, that is net wage bill 2,51,000. Next, we are required to calculate total wage cost. Now we'll prepare statement of total wage cost. This is prepared from the point of view of employer. As per the time card, the gross earnings of the workman is 3 lakhs. Gross earning of workman is rupees 3 lakhs. Company's contribution to Provident Fund and ESI rupees 25,000 and 8,000 respectively. This is in addition to gross earnings of the employees. That means this 3 lakh do not include this amount of 25,000 and 8,000. So we are required to add these amounts to rupees 3 lakh to arrive at company's total cost. Company's contribution towards Provident Fund 25,000. Company's contribution towards ESI premium 8,000. These are added, it is 33,000. This amount will be added to gross earnings rupees 3 lakhs. So total wage cost is 3,33,000 for the company. In this question, we have learned from employee point of view, net earnings, employer point of view, total wage cost. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.